Well, good afternoon and welcome to the Brown Bag webinar series presented by the UC Merced Regional SBDC Network. I'm Kelly Bearden, Director of the CSU Bakersfield Small Business Development Center, and I'm your moderator and host for today, which I think is going to be an outstanding program. We're also here to celebrate SBDC, a National SBDC Day that you'll find a little bit about in just a second. So first of all, the UC Merced Regional Network composes of 14 counties throughout the Central California region, extending down from the north from Mono County to Kern in the south, over to the western coastal central coast of the Monterey and San Luis Obispo counties to the Nevada border. It composes of 14 counties. The SBDC, as most of you recognize, is a national program. And today we have a special guest, an announcement from our SBA National Administrator, who is going to give a little welcome here. And away we go.
Hi, I'm Linda McMahon. I'm the Administrator for the Small Business Administration. I want to let you know that this Wednesday, March 22nd, is SBDC Day, or Small Business Development Center Day. I want to invite you to come to our centers for this low-cost and often free service to help with training and counseling to help you grow your business. So please take advantage of the men and women who are there waiting to help you. So if you want to know where the local office is near you, go to sba.gov and click on local assistance, and then tweet #SBDC Day.
So thank you for that, our administrator. And so today, interacting with the webinar, we want to introduce you to a few features that you have access to. If you notice off to the right, you will have a dashboard. And in that dashboard, there are areas to where you can open by clicking the right arrow and answering a question. Our presenter today will take questions at the conclusion of her presentation. So please, you have questions, feel free to ask, and we'll get to them as soon as we can, which will be at the end of the presentation. All of our attendees are muted, so it is important to use that question box. You will note also that at the end of the webinar, a survey will come on. If you would like to receive more information about today's webinar, feel free to complete the survey. We encourage you to do that, and we welcome your input on future webinars. But also, if there's a handout, please mention that, and we can get that to you in the next few days. So what we do at the SBDC is we provide, I'm a video guy today, so let's go on with another video explaining what SBDC
California
does.
Small Business Development Centers are the state's #1 resource for current business owners and aspiring entrepreneurs. Our 43 SBDC centers throughout the state offer low-cost expert one-to-one business consulting, training, and online courses in a variety of areas like startup assistance, debt and equity funding, attracting and retaining customers, international trade and product commercialization. Our consultants are current and former small business owners, ready to assist you with even your most complex business needs. So, if you are looking for a loan or equity capital for your new tech venture, want to build a new website, need help starting or expanding your restaurant, or would like to sell your products internationally, make the California SBDCs your first stop. To get started, simply visit us online to find the location closest to you at californiasbdc.org. The California Small Business Development Centers are ready to help your business start, grow, and succeed.
So, wow, they can say it a lot better than I can. So another thing that the SBDCs are working with before we get on with our show is there's a new state law as far as EDD, the Employment Development Department, mandatory e-file and e-pay for quarterly tax returns and tax payments. So if you have over 10 employees, it is required that you do that now. And next year, it's going to be effective for all. Contact your local SBDC if you need assistance in that area, as we're here to help, and we don't want to see you get any unnecessary penalties or interest to pay along those lines. Paying payroll taxes is enough. So upcoming webinars, we have one on April the 5th. It's going to be on financial tools. Great time to do a financial checkup of your business as it occurs during the tax season and you have relevant financial information from the year before. And then on April 12th, another CSU Bakersfield SBDC webinar is going to be the Lean Canvas, the business generation model search, and looking for the canvas and filling out the 9 boxes for startup businesses that are looking to do more in that particular area. A couple more coming up later in April, regional webinars on government contracting and employee burnout, avoiding employee burnout, both very topical webinars. And lastly, I want to wish a happy birthday to Katie. Our presenter today, who I'll introduce momentarily, is celebrating her 29th birthday today, a monumental birthday. I know if I was turning 29, I wouldn't be on doing a webinar. So thanks for joining us, Katie, today on webinar day. And that brings us to our guest speaker today. And our speaker today is Katie Winders. And Katie has over 12 years experience of working with QuickBooks and over 25 years experience in bookkeeping. She's a proud graduate of the California State University system, having attended college at Long Beach. And she has always an interest in small business because of her family was involved in small business. And she recognizes the actual issues and challenges facing our small businesses. So, Katie, take it away. I will transfer you this wonderful microphone and give you the screen, and it's all yours.
Okay, thank you, Kelly. So I have 25 years of bookkeeping, working with bookkeeping, and I just turned 29.
That's a great kindergarten class.
That's right. That's right. Thank you for that lovely introduction. And I've had a nice morning so far, greeted with fresh flowers this morning. So good afternoon to everyone, and thank you very much for attending the QuickBooks webinar today. And I'm assuming you can see my screen, Kelly?
It's looking really beautiful.
Excellent. So today I'm going to be working with QuickBooks Pro 2016 desktop version. Mine happens to be an accountant version, but you won't notice any difference in that. This is not QBO or QuickBooks Online, which is stored in the cloud. My QuickBooks is stored desktop, and so if you do have QBO, it's not going to look really familiar to you. So I just wanted to point that out from the very beginning. I'm working on a sample file called Rock Castle Construction. And if you've ever taken a Intuit Pro Advisor course, this is the sample file that they do give you. So it's a very dynamic file and a lot that we can cover. So as Kelly said, there's going to be 4 main topics for today. The first one I'm going to cover is cleaning up your accounts, making sure that everything is looking nice within QuickBooks. The second item is tracking 1099 vendors. Then I'm going to go into running financial reports, and lastly cover class tracking. And as Kelly said, if you have any questions, jot them down as I'm talking, and send that question to Kelly, and at the very end, hopefully we'll have time to answer some questions. So the item that I'm going to start with today is cleaning up your account list. Whether you've been in business a short time or a long time, sometimes accounts get duplicated or you're no longer using them, and it's a good idea to go in every now and then and just kind of clean up things so it's looking nice and neat. And so the first example I want to give you is you have a checking account and you've closed that account either because there was fraud or you've decided to move to another bank, and you're going to close that account and open a new account. So the first thing I'm going to do is from my homepage, I do like to work off my homepage, so you'll see me continuing to bounce back to my homepage. The homepage is easily accessible by clicking on home, and it has the workflow represented on the front, and so it's an easy way to navigate. So from the homepage, I'm going to press my chart of accounts. I'm going to open them up. And the new account that we've opened is with, say, Wells Fargo. So I'm going to go down to my accounts down in the lower left, bring up the drop up, and add a new bank account. So I'm going to go to select bank, continue. I'm going to put in the name of the institution, which kind of helps identify that account. And I also like to put in the last 4 of the checking account number. That way, if one bookkeeper leaves and a new one comes, it's easy for them to identify which account is which. If you're using numbers, you would also want to enter a number. I'm going to save and close there. Not going to set it up for bank feeds. And now you can see there's my new account that I've entered. And so then the question is, what do we do with our old account? So we still have our checking account in here, our original one. And so what I would do is wait until that account is completely reconciled, zeroed out, everything's come through, that account's closed, and then simply select that account. Again, you can go down to the bottom and make that inactive. And now that account's no longer showing. And so that's a real easy way to take out one account and add a new account. And at any time, if you would like to look at those inactive accounts, you're just going to go ahead and click at the very bottom, include inactive, and then it'll show all of those inactive accounts. So none of that information is gone. It's just not showing up when you have this unclicked. The next thing that often happens as you have different people working on your accounting is you get certain items entered twice that mean the same thing. And so in my example, we have an expense account called gas, and we also have one called fuel. And those really need to be merged together because it's just one account. So the first thing you're going to do is decide, do you want to call it gas or fuel, whatever works best for you, and then decide which one that you don't want. So we're going to click on the one you don't want because I've decided I want fuel. I'm going to do a right click there. I'm going to edit that account. And then where it says gas, I'm going to type fuel. Say OK. Would you like to merge them? I love that sound. And then all of that information got merged and we only have that one item. And so that's an easy way to clean up duplicate items that are appearing on your chart of accounts. The next thing we're going to talk about is making accounts inactive that you're no longer using. So in our example, we had a loan for a truck that we purchased back in 07, or it was a truck that was a 2007. We had a loan on that truck. We paid it off in full, but it's still sitting on our chart of accounts with a 0 balance. And so once you know that that item is something you no longer need, you don't need it to show up on your balance sheet or your profit and loss, you can simply click on that item and do the same thing, either do a right click and make it inactive, or pop down to the lower left and make account inactive. And again, it'll fall off that list. All the information is there and available, but it's not going to print on the balance sheet as a loan balance anymore. So I'm going to take that away. And so that's a simple way to work with the chart of accounts. I'm going to go ahead and close the chart of accounts, and I have to move the GoToWebinar page down, sorry. I'm going to go ahead and close my chart of accounts. That takes me back to the home page. And so I'd recommend that you go through each of your vendor list, your customer list, the jobs within your customers, as well as your employee list, and make any items inactive or merge them to clean up those accounts as well. Before I do that, one way that I like to work is with an open window list. I find it's very quick and efficient. So if you just go to view and click on open window list, it'll then show all of the different windows that you have open here. Side note, I like my icons up at the top, but in that same place, if you like your icons over on the left, feel free to put them over on the left if that's your preference for working. Again, I like mine up at the top, and I like to have that open window list there. So the next place that we're going to go is to a vendor. I'm going to go into our vendor center. You can access that either by accessing it from the home page or clicking on the icon for vendor. And in our example, someone has been working and they have entered Cal Oil twice. We have Cal Oil Company with Cal Oil squished together. And then we have Cal Oil Company with Cal capitalized with a space in between. And so the first thing you would do is determine which of those is the company that you want to keep and which one you want to get rid of. In our example, I want to get rid of the Cal with the all caps. And so I'm going to double click and open up that company file. And I'm going to change it so it looks exactly like the one that I want it to merge with. That would be uppercase, lowercase, periods, any type of symbol that it has, it needs to look exact. And so I'm going to change it to Cal Oil, one word, company, select OK. Again, it indicates that the name is already being used. And would you like to merge them? And I'm going to say yes. And there we get that sound again, and now they're merged. Okay, moving on. I'd like to go ahead and move on to tracking our 1099 vendors. And so it's important as a business owner that if you have any person or company that does a service for your business, and that they are not a corporation, they're a sole proprietor, or they're a partnership, that you provide them with a 1099 at the end of the year if you've paid them over $600. And QuickBooks has a very seamless way of tracking all this information for you. And so that's what I'd like to go ahead and talk about today. So the first thing we're going to do is we're going to open, we're in our vendor center. So again, we could be at our homepage. We can access our vendors here. I'm just going to pop right into my vendor center. And we are going to look at our accountant, who is Faye Marine. She's right here. And once I have her highlighted, I'm going to double click on it. I'm going to open up her file. And if you notice there's tabs over here to the left, I'm going to click on the tax setting tab. Once I'm in there, I can see that she is set up to get a 1099 and I have her social security number. But what if for your company you go in here and this page is blank, you don't see any information here? Then currently you're not set up to process 1099s, but it's a quick, easy change, and I'd like to show you how to do that right now. So in order, if you don't have these fields here, go into Edit within your menu, drop down to Preferences, and you can see there's many, many different preferences here. If you scroll all the way down to the bottom, you'll see that you have a preference for tax 1099. And if you just tab over, you have My Preferences and Company Preferences, tab over to the Company Preference. Right here, do you file 1099 miscellaneous forms? So if in your QuickBooks, No is selected, go ahead and just select Yes, say okay, it'll make that save. And then when you look at Faye and you open up her company file and you select tax settings, you'll see this information here. And you can just select that vendor, type in either their EIN or their social security number, and then QuickBooks will do the tracking for you to determine if they're going to get a 1099 at year end. QuickBooks knows that that minimum threshold is $600, and it will be ready to process those at the year end. One little note is there is a little bit of a mapping process where you have to tell QuickBooks which accounts could be subject to a 1099. So if you have an account called contract labor or subcontractors or repairs and maintenance or whatever your expense accounts are that might be subject, might be a service item, then you'll have to do a little bit of mapping. Not difficult, just make sure you get it mapped as you add new accounts. So another small note, if you're unaware whether they're a 1099 vendor or if they're an employee, if they should be an employee, please visit your local SBDC or Google independent contractor versus employee. And there is a nice IRS document there that spells out whether someone is allowed to be an independent contractor or an employee. Just because someone comes to you and says, I prefer to be an independent contractor, doesn't mean that you can pay them as such and that it's the correct way to do that. One of the critical criteria is the degree of control over that person or company's business or work that they're performing or service that they're performing. So just be sure before you are using subcontractors that you make sure that you're using them in a correct way. It is an item that the IRS regularly audits and catches people on. So just a side note. So as I move on, I'd like to talk about running financial reports. So I'm going to go ahead and exit out of there. And we all know that financial analysis is critical to a business. It's critical to know your finances and know how you're doing. You'd be surprised how many clients that we meet with who have never pulled up a P&L and have never looked at a balance sheet. And I think it's primarily because they have a sense of nervousness about that. And when they pull it up, they don't really understand it. And so it's just easier not to look at that. And so we're going to talk a little bit and open up some of these reports and talk about them a little bit. And hopefully that'll give you a little bit more familiarity. And then if you are needing more information, please contact your local SBDC office and meet with a financial consultant and say, I just want a little bit more information on this. I'm not feeling comfortable. I want to know what I'm looking at. And so the first report that is critical to a business, if you bill customers and you're waiting for payment from them. So you bill a customer and then you give them, say, net 30 and you wait for payments. That report is called an Accounts Receivable Aging Report. And we're going to access the report by clicking on our upper menu, Reports, dropping down to Customers and Receivables. And then the very first one is you slide over that you see is your AR aging report. So I'm going to go ahead and open that report. QuickBooks very quickly and easily pulls it up. We can change the date if you need to change the date. But I'm going to go ahead and just scroll down and we can see for Rockcastle Construction that it's showing every single customer, and they also track jobs, so it's showing their jobs, how much that customer owes, and where they are in the payment process. So most of our customers are current, and that's great news. But we do have Mr. Vitten down here with his kitchen remodel who is way out at over 90 days. And so it's important to keep on top of those receivables. And if you see that someone is behind and you're needing payment, now's the time to send them a statement, give them a quick call, follow up with them. At any point in your accounts receivable report, you want to drill down and see what that charge is from. Anytime you see your magnifier glass, you can just sit on that item, double click, drill down. It's showing it's an invoice, and I can even drill down deeper and see that this $700 is an invoice for some repair work. And so then you might say, well, is there a dispute with it? Whatever the case is, we need to contact Mr. Vitten and ask him where that payment is. We want to keep our cash flow going. So I'm going to save and close out of there as it brings me back up to just my vendor center open. And the next report that I want to look at is your payables. Again, important for cash flow. You want to know what your payables are at any time. So I'm going to go up into my menu, click on reports again, go down to vendors and payables, and slide over to my AP aging summary. And this report, again, it's great for your cash flow analysis and knowing what you owe your vendors at any time. And so we can see here that we have a list of vendors that we owe. We're pretty current. We have one that's a little bit out there. Probably want to get that one paid right away, or contact Patent Hardware and let them know that we'll have a check in the mail in 5-10 days, whatever it is. But we know that we need to bring in some money because we have about $27,500 in payables that are coming up in the next 30 days. Another report that I like that is similar to this one, also pertaining to your vendors, is under reports, vendors, and then unpaid bills detail. When I click on that, it's going to give me the same information, same total, but it's giving it to me in a different format. It's showing each vendor the amount that's due, but also the due date. And this is a nice report if you're a business owner or manager and you have a bookkeeper or someone in your office that handles the cutting of the checks, because you can take this report and print it, grab your yellow highlighter, and then go through and say, I want you to pay, you know, the $500 bill to CU Electric, but not the $250 one, and just go through and highlight those. Then you can hand that back to them. They can cut all the checks that you want them to cut, knowing how much money you have available to spend, and update it. As soon as those are paid, they'll fall off the list, and it's just an easy way and a report that I like. So I thought I would share it with you. I'm going to X out of our unpaid bills detail. And the next report that I'd like to bring up is our profit and loss. So X out of there. Under reports, I'm going to go down this time to company and financial. And I'm sure you notice as I'm going through these reports, there are a lot of different options, and you can really run reports on many different areas and customize them in about any way you can think of. So in this case, I'm going to company and financial, and I'm going to slide over to my profit and loss standard. I'm going to open up that report, and then I have the options to run this report for any period of time. And so in our example, I'm going to go ahead and run the report for January. Helps if I key it in right. Through December of 18, which I realize is in the future, but that's how this report is set up. It's how this Rockcastle Construction's in the future for some reason. So here we have our profit and loss from January through December of 2018. And as we review this, first thing we're going to always see on our profit and loss is our income. And so this company chooses to divide up their income in many different ways: design, labor, subcontract, where that income is coming from. Some of you may just have job income or income from one source, and that's fine. So you know exactly what your income is. We also had a little bit of reimbursement income, so we have total income of $453,000. As we scroll down within our profit and loss, the next thing we see is our cost of goods sold. So our cost of goods sold to produce that income is a total of $180,000. And the difference between the two, which is our gross profit, now we're seeing is $273,700 for the year. As we scroll down any further, now we get into our basic expenses, our general administrative overhead expenses. We have automobile expenses, we have some bank service charges, we have some insurance, we have interest expenses, and it's a good idea to look at this report on a regular basis and see if anything is looking out of line. Is it out of line that workers' comp is $13,000 for a business that's doing the income that it's doing? We also have our labor, we have some accounting fees, and so on, all the way down to the bottom, where we have a little bit of other income. Maybe we had a refund for something, or here we have a little interest income. And so the net income for 2018, which is our profit, if that number were negative down there, then we would call that obviously a loss. And so a couple things that we can do. So this is our basic P&L. If we go into customize, we can also look at this P&L as a percent of income simply by opening the customized report, and on the very first screen here, clicking percent of income and saying okay. And often you can find data for your industry of what is standard for cost of goods sold and expenses for the percent of income. So in this example, our cost of goods sold is 39.7% as it relates to income. And so you can do a little bit of analysis this way and see what are the items that are higher. Well, this makes perfect sense that wages are higher because in a construction business, wages are a big part of the expenses, as opposed to maybe a retail business where product might be more so. So you can see all the way down, it gives us a percent of income. I'm going to go in there and uncheck that. And now I want to do a little bit of analysis looking at my profit and loss, but comparing it for the last 3 years. And so I'm going to change my date range from 2018 to 2016 and do a refresh. So it's pulling up all the dates, but then I'm going to change my columns to represent each column as a year. And anytime you see these 3 little dots there, you can pull your columns in and adjust them if you want them to be a little more concise. So now we're looking at a profit and loss that's comparing 16, 17, and 18. I'm going to scroll back up to the top. And we can look first at our income. We started out with 48,000, jumped up to 168. 2018, our most current year, income more than doubled. And so we can see that we have a nice trend going here, but it's also important to go down and look and see if you see any flags or anything that might look unusual or anything that causes you questions or concern. So I would go down and just, eyeball it and do a comparison. Obviously, job materials are up considerably. That seems natural because our sales or income is up so much. We're using more subcontractors now, where that first year we weren't using anyways. And so as we scroll down, we're just comparing. When I get here, I see our depreciation is going 0. And so what that tells me is that our depreciation hasn't been posted. And so if we were in 2019 and 2018 were closed out, we would want to go back to our tax return or to our accountant and make sure that that depreciation was posted appropriately, because clearly it hasn't been, and there should be some depreciation there. So as you can see, it's just a matter of comparing. A great way to compare all the way down, and then we can look at what our income was in relation to our total profit here. And so it looks like January to December of 18 was a great year for us. Similarly, I'm going to go back to looking at just 2018, but this time I want to look at our sales by month. And this is a great way to see, often you already know, but to just kind of look at trends within your business and see if you have some months that are more busy than others. So looking at our income, comparing January, I'm going to squish it in a little more so you can see the whole year on one page. So looking at January through December of 2018 and just scanning across, it looks like we really had a bump in sales in October and November. And then we can say, was that a result of a promotion we did? Is that just seasonal for our business? Business is picking up. So you can do a little bit further analysis on your business. And so I just wanted to show you some of the basic ways to look at your years, your months. And of course, you can sort this in all different ways, including quarter and on all kinds of ways. And so dig in there and check out your P&L. Have fun with it. I also lastly want to note on this is if, I'm going to go back to my year total. If you're looking at these numbers and you're seeing large negative numbers, either as income or expenses, then I would want to dig down a little deeper and see why that's the case. Are there some items that are mapped incorrectly? Maybe they're mapped to an expense account instead of an income account, or why is that the case? And so go ahead and make sure that you're looking at those and seeing if anything looks out of the ordinary. And of course, a negative income generally is a flag. This one is okay because we can see that it was a discount given. And so we're tracking that separately so we know how much discounts we're giving to people. So one of the questions I often get from clients is, Katie, I made $117,000 according to this report, but I don't have any money in the bank. Where did it go? Why isn't this report showing that? And that's where our balance sheet comes in, and that's what I'd like to go ahead and look at next. So again, from reports, I'm going to drop down to company and financial, and then scooch down to balance sheet standard. So I'm going to open up my balance sheet standard. And from here, the balance sheet always shows again shows in the a certain order. And the first thing that you're going to see on your balance sheet are your assets. So assets are things that you have or that you own or monies that people owe you. And so our first assets are the money we have in our bank accounts on this date, and your balance sheet is going to be a snapshot in time. It's current as of that date in that moment. So our balances of our bank's accounts, including our savings account, were right here as of December 15th. We're waiting for receivables from our customers of $85,000. I'm going to scroll down. We have some assets in the way of furniture and equipment, vehicles, and then depreciation, of course, that is lowering the value of their assets. And so our total assets right now for this business are $637,000. As we continue to scroll down on our balance sheet, we come across our liabilities. Liabilities are monies that people owe the business. And so first thing we have is our accounts payable, and I'm sorry, monies that we owe. Sorry, monies that we owe. First thing is our accounts payable, and that is any bills that have been entered for vendors that are waiting to be paid. We have a little bit of credit card payments that we need to make. We have some payroll liabilities that haven't been paid yet, as well as we have some sales tax that hasn't been paid, and some long-term liabilities in the way of loans on different vehicles, trucks, equipment, and we even have a building in there. And then your assets minus your liabilities equal your equity. And so here's the equity section. We had some opening balance equity when we opened the account. There's some capital stock out there, retained earnings that we've kept from years before. And then this income number, this $113,000, is pulling directly from our P&L. I'm going to change the date so you can see where that's pulling from. There's that $113,810. So that income is pulling over from your P&L. And so this kind of tells us the health of a business. I mean, if you look at a balance sheet and you have a very few assets and a lot of liabilities, you have a lot that you owe, but not much that you own. And so this is an important report to study, to kind of get to know. And same as with the P&L, there are some things to watch for on this report and things that I see when I meet with clients. And one of those first things that I see is if you have negative accounts receivables, unless you have a client that prepaid on a job and you haven't invoiced them yet, you shouldn't have negative accounts receivables. The same thing with your payables. If you're seeing negative accounts payables, either something's not getting entered right, posted right, deposited right, something isn't quite right, and just need to drill down a little bit. One other area that I see some confusion at times is undeposited funds. Undeposited funds is an account that QuickBooks uses to hold money until you go to the bank. So you've invoiced a customer, you've received their payment when you received it, but it's still sitting in the bank book or it's sitting in the bank bag while you accumulate multiple deposits before you run over to the bank on Friday, let's say. And so sometimes I see that people don't understand how this undeposited fund works, and they receive the payment, but they never pull the payment out of undeposited funds and put it in the bank account. And so if you're seeing a really large number here, then there are checks waiting to get deposited, and you need to have a little cleanup that needs to be done. And where you're going to see those checks, if I go to banking and make deposit, there's those checks that are sitting in undeposited funds waiting to be deposited. So if you have a list here that's a mile long, we have a little cleanup to do, and you might want to check in with your SBDC or accountant and talk about how to get that cleaned up. So I'm going to exit out of there, and I am watching my time here. It looks like I have about 5 more minutes. Make sure if you have any questions to go ahead and get those ready. Another item to look at on your balance sheet, still talking about reports, are your loan balances. And so if you're looking at your liabilities and you're looking at your loan balances and you know that this pickup truck is paid off, this balance should be 0. And if not, it's probably that the person making the payments and doing the entries has posted that to an expense account instead of the loan. So again, some cleanup that you can do, the person in the office or your accountant, but just things to be aware of. One last little example with reports, and then I'm going to move on to class tracking, is I have a example where I went to a client and I was looking at their balance sheet, and they had a very, very large number of payroll liabilities. It was like over $100,000. It was a big number. And I asked the gal who had been working on it if she had paid the payroll liabilities, and she said, oh, yes. So I popped into the employee center, and I was looking at the liabilities from that side, and they were showing red, meaning they hadn't been paid. And again, asked her if she'd paid the payroll taxes, if everything was current, and she assured me yes. And so I later went in, sat down with the owner, and indeed she had stopped paying the payroll liabilities. She wasn't trying to do anything wrong. She was just having some cash flow issues, and instead of going to the business owner and letting him know what was going on, she just chose to not pay the payroll taxes, which is about the worst thing that you can do because they hammer you pretty hard with fines and interest fees. So again, if you're looking at your balance sheet and you're seeing funky numbers in there, anywhere in there, dig deeper. Okay, a few more minutes. I'd like to touch on class tracking. So class tracking is a fantastic feature within QuickBooks, a tool that you can use if your business has areas or departments. For example, if you have store 1 and store 2, a store in one town, a store in another, and you want to track those all in the same set of books, but you want to keep that information separate for analysis. In this example, we have like remodels and new builds. And so the first thing you'd want to do is see if you're set up for class tracking currently. And how you do that is you go into your edit, drop down to preferences, and at the very top under your accounting tab, if you open up company preferences, right here under accounting company preferences is use class tracking for transactions. And you can also have it prompt you if you forget to enter the class, it'll prompt you to do that. So I'm going to kind of go a little deeper, show you what that means, and see if it might be a feature that your business can use, because I think for a lot of businesses it's a great feature. So we are set up for classes, and so the first place I'm going to show you is when you enter your bill. Every time you enter a bill, you're going to assign a class. In our example, our classes are new construction, remodel, and overhead. So if I'm entering the PG&E bill, I'm going to enter overhead, but otherwise I'm going to determine whether this bill is for one of our jobs that's a new construction or a remodel. Same thing, if I had store 1 or store 2, where is this merchandise, or where is this expense going to? I'm going to go out of there, and I'm going to jump into my customers, and I want to show you an invoice. So when we invoice our customer, right up here at the top, it's going to show class. And then again, you can choose, is this new construction or is this a remodel? And so as you do this, and it is a little bit more work on the front end, but worth it if you have an industry where this you want to track things separately. What this allows us to do is when we print our P&L, so I went to the same place, I went up to reports, clicked on our P&L. Now, when we do our columns, we can sort them by class. And so we can look at our P&L, our new construction versus our remodels. Of course, we're going to have overhead, and we're not going to divide those into the other two classes unless you want to. And then unclassified is anything you forgot to classify. So what did I forget to classify? I'm going to scroll down. Right down there at the bottom, oh, I paid the computer guy $250 to do a repair, and I forgot to class it. So I'm going to double click, open that up, open up the check that I wrote, and then over on the side here in class, I'm going to go ahead and put that towards overhead, save that, and then that unclassified drops off. And that's what you don't want any unclassified. If you're using classes, be thoughtful about it. Don't use more than about 5 or it gets kind of crazy. And then make sure that if you're using the feature, use it. So as I scroll to the top, then I can do some analysis of my income. Where is more of my income coming from? And in our case, more of it's coming to from remodels. And then as I look at the very bottom, where's our profit coming from? Well, if on our new construction, we only made $800, and our remodels, we made $31,000, that would kind of tick in my head that remodels are the way to go unless you have some further information and you need to do some further analysis on that. So that is one of the advantages of doing classes, just for some additional analysis. And we have about 10 minutes left, and I think I'll go ahead and ask Kelly if we have any questions that have come in.
Yes, Katie, we do have a few questions, and we're always looking for more. So if you have a question, here's a great opportunity for you to get it answered. The first question is, can you discuss the differences from the online version, the pros and cons of each, or maybe any differences than you went over today?
Okay, sure. So the desktop version, one of them is going to be a cost factor. And desktop version, you're going to purchase the box, or it could be a download, one time, and you can use that for 3 years if you're doing payroll within QuickBooks. If you're not doing payroll, you can use it for even longer. Whereas the QuickBooks Online is a monthly subscription. So you're going to be paying every month forever. So they've gone to that subscription basis. It's a much better profit model for them. One issue I had a client who set it up and then didn't keep current on his payments, and it went away. And so do know you need to keep current on, if you go with the QBO, you need to keep current on those monthly payments. So there's one thing, the cost factor. One of the pros on QBO is it is available from anywhere. It's available you can access it from your iPhone, your iPad, anywhere in the cloud you can access it. I find I prefer desktop, and if I need to access my QuickBooks, I just take my laptop with me and travel with it, and then I can access mine on time anywhere as well. But if you have multiple people accessing it, the QBO might be a good option for you. However, they do act very differently, and so it's important to understand those differences before you just kind of go make that choice. For me, the desktop is more intuitive, and I find that the QuickBooks Online, there tend to be more errors within it. If you can get it set up correctly, especially that undeposited funds feature really throws people in QuickBooks Online. But definitely look at all those different pros and cons before you decide which one you're going to get. And if you do want to change from one to another, it's pretty seamless to move from desktop to QBO, but it is not as easy to move from QBO back to desktop. So keep that in mind as well.
Great. Next question. Next question is right here. And it's, how can I reconcile accounts to spot obvious mistakes in some of my accounts? For example, there shouldn't be a negative balance in an expense account. And is there also any way to have an overall way of checking if there are obvious mistakes on accounts?
Let's see. So first of all, you are going to reconcile your accounts. You're going to reconcile, from banking, you're going to reconcile all your checkings, your savings, credit card accounts, and any of those. I think probably the primary way that you're going to spot those negative balances is when you're running that P&L and you're running your balance sheet. Because it could be that when someone sets up a new item from the item list, and you'll notice each item is linked or mapped to an account on the chart of accounts. And so if this link here is wrong, so for example, this is an income account, if someone entered removal of labor and actually mapped that to an expense account, that's where you're going to see things posted wrong. So you could look here at your list and just make sure that this account is correct, but you're going to see it first on your either your P&L or your balance sheet. So I would mainly the balance sheet. I'm sorry, mainly the P&L. I'm thinking one thing and saying another. So mainly the P&L. So go ahead and try to check from the P&L, but it's important here when you're setting up these accounts and any staff you have that are actually going to be going in and setting up items on the item list, that those are mapped correct to the correct account. Was there a second part to that question?
I think you covered it.
Okay.
Next question. If I'm doing direct deposit and it's already set up, do I need to log into QuickBooks Payroll online or is it done on the desktop?
So my question would be, are you doing
If I'm,
payroll are you doing payroll through QuickBooks or are you doing payroll through a third-party vendor?
and I don't know
So,
that answer.
okay,
But
so if
doing
you're
direct
doing,
deposit and it's all set up, log into QuickBooks Payroll online or is it done on the desktop?
so I'm going to answer it the way I think I'm seeing it. If you're using payroll and you're creating your payroll through QuickBooks and you're doing direct deposit into your employee's checking account, it is going to automatically do that. And the way to check that would be after you do payroll, pop into your checking account and make sure you see a transaction there indicating that that employee has received a paycheck, and you'll see it right there in the account. On the other hand, if you are using a third-party vendor, you're using Paychex, ADP, your local bank, whatever it is, if they are doing it and they're doing direct deposit for your employees, you're going to have to go back in and enter that information in your checking account. So you're either going to need to, they should provide you with a payroll summary. You're either going to need to do a journal entry, or you're going to go and check by check enter all those checks within your check register. And you would notice when you did your bank rec, if any of those came out of your bank account, you would notice in your bank reconciliation process whether they were missing or not. So did that answer, you think?
Yes.
Okay.
I think so. Katie,
Okay.
being old school, I love this next question. My boss just handed me a handwritten check. What's the best way to enter it?
All right, perfect. Entering a check on the fly, and that happens all the time. So the best way to enter it is we're going to go to our home page, and you could go in, enter bill and pay bill, but really that's a two-step process, and we already know that check is written. So we're just going to go to write checks. We're going to select the correct account that he wrote it out of. So let's see, he wrote it out of that Wells Fargo account. We have the check in front of us, so we know that the check was check 1000. We're going to enter the date, again, who it's to. If there's a bill that's waiting to be written, it'll want to know, is this a bill that's already entered? And if not, we can just say continue writing check. And he wrote the check for $150. We are going to post it to the correct account. And when we hit save and close, and we go look at our new Wells Fargo account, boom, there it is. And so super quick and easy, just writing a check on the fly, access right from your home page, right there.
Last question, Katie. How does the vacation accrual work in QuickBooks, and can you explain how to use this feature?
Okay, so there are two. Let me first show you within the Employee Center where it's set up. So I've gone into our Employee Center from the home page. You could also do it from your icon. And when you open up an employee, so I sat on down and double clicked on him, and from your tabs on the left, you go into payroll information. Our sick and vacation is right there. So when I click on that tab, it opens up a window, top information being for sick pay, which is, by the way, mandatory in California, that your employees can accrue up to 24 hours per year. So it's important that you also have your sick pay set up. Some employees will front load that at the beginning of the year. Some employers will go ahead and set that up as an accrual. But down here is the portion for your vacation. So you're going to enter how many available hours if they've already accrued some. And if they're accruing every paycheck, or if you're starting at the beginning of the year, or you're going to accrue every hour on paycheck. So you'll need to determine what is going to be your accrual process. And hours accrued per paycheck, because that's the one we selected. So in our example, they're earning 6.45 hours per paycheck. Based on their schedule, they are actually paid bi-weekly. I can see that up here. That's the schedule that's for them. And then you can set the maximum number of hours. So if they're going to get 1 week vacation, then you would go ahead and enter this as 40, and that's where it's going to max out. And then you can choose whether you want to reset hours each new year. And so right there, again, that's within the employee under sick and vacation. And if you have a standard for most employees under edit and preferences, you can also access that from the employee, payroll employees, company preferences, and you can set right here, you can set a standard or a default. You can always override it, but here can be a default for each of your employees. So thank you. That was a good question.
Well, great. Well, thank you, Katie. I think we're out of time. We did get a comment saying that an individual out there has used QuickBooks for 20 years and learned 2 new things today. So that's good for all. So our time is up for Katie
Awesome.
Winters. A very happy birthday for you today. I'm Kelly Bearden.
Thank you
We'll be
much.
back with 4 webinars in April. Look forward to seeing you there. Goodbye, everybody.
Goodbye.